Hello and welcome to Crux Investor. We caught up earlier today with Kevin Bullock, CEO of TSX listed Anaconda Mining. If you want our thoughts on that conversation, their plans for next year, and of course the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports. There's training videos. There are commentaries from experts from around the world on a variety of commodities and companies. There's also summaries of other interviews that we have done and a thriving community of investors sharing their thoughts and ideas with each other with some exclusive information. So do go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, leave your comments below. And if you want to see what we talked about, take a look in the description below. Kevin, how are you doing, sir?
I'm doing very well. Glad to be back here.
Yeah, wasn't so long you're on here, but you've had some nice drill results. I think we're going to talk about those today. But first of all, are you well?
I'm very well. Enjoying the pandemic time at home and just trying to stay active a little bit, which I think everybody needs to do now that we're sitting in front of our computers most of the time.
Exactly. Good on you. Wise words indeed. Well, look, before we kind of get into some of these news releases, can you give people new to the story a 1-minute overview of the business, please?
Yeah, Anaconda Mining is a unique junior company in the sense that it has production and cash flow, and it uses that to carry out its growth strategy without diluting the company so much to existing shareholders or potential new shareholders. So we've been able to really put forward a plan of aggressive growth. We want to be 100 to 150,000 ounce a year producer within the next 3 to 5 years. Currently, we're active in Eastern Canada, in Newfoundland and Nova Scotia. And we're a producer in Newfoundland of just under 20,000 ounces a year. And we have a development project called Goldboro in Nova Scotia. So we are Atlantic-based.
Brilliant. Okay, well, thanks for that summary. And I'm also going to point people to the link below here to our last conversation where we went through business plan, the history, your track record, and how you kind of got to this point. But today, if you don't mind, we've sort of looked through some of the press releases coming out. You're hitting these big grades that you said you thought you would. But also you're talking about the optimization process. We're kind of interested in what you mean by that. So why don't you just remind us of some of the grades that you guys have been hitting, and then let's kind of look forward as to how this thing looks going forward.
Yeah, certainly. I mean, we've last time I was on the program, we discussed drilling at Zone 278, which is something that may extend the mine life at Point Rousse, and that's where we got some fantastic grades in the drilling there. And it's much wider and higher grade than we're used to in the last 10 years of our mining in Newfoundland. We're hitting some very good numbers, and anywhere from 5 grams over 5 meters to 15 grams over 8 meters. So some very good intersections at Zone 278. What we've managed to do since the last time we spoke is we've drilled off the limits of what we think are the limits at the moment. So we've transitioned the drill now into an infill drill program in order to start putting together a resource, which we'll then use to describe the project to government and start applying for a permit already, so that we can actually start developing Zone 278 as the next mine after Argyle, which is producing at the moment. We managed to approve the development of Argyle, get it done, get the permits in, and we've already stockpiled 50,000 tons of ore on surface that's starting to go through the mill today.
Okay, but you're producing cash at the moment. I think that's the interesting thing about you, that's enabling you to kind of obviously reduce the amount of dilution going on here, but also advance projects a little bit quicker than you would do otherwise. So obviously Point Rousse going well, as discussed last time. Argyle the same, but I think people want to look and talk about Goldboro, because that you positioned to me last time as the big opportunity, something of scale, which then becomes a lot more interesting.
Well, it's definitely a transition and turning point for us as a public company. This is a world-class deposit that's currently sitting at 1.4 million ounces of total resource in Nova Scotia. It's subject to a definitive feasibility study right now, whereby we've gone through an optimization process. Given the time frame we have and the time allowance we have for permitting, we've done some optimization on the project. And the major turning point for us, and why we're so excited about it and wanted to get back on here sooner rather than later, is that there's a step change. There's a complete change to what we're looking at the Goldboro project. We initially were looking at it as a high-grade, narrow vein deposit that we would mine underground. But with infill drilling And with further information on the deposit and our optimization process of remodeling the mineralization, we've noticed that there's a large amount of tons and gold in the lower grade ratio or ranges between the high grade veins. What does that mean economically? It means that the gold carries at enough of a grade to be economical for mining a larger open pit as opposed to an underground mine. That changes things significantly. It's a material change. We announced it, I think, on the 21st of November. Somewhere around there was a press release suggesting that we're looking at this entirely differently because of the optimization process. So we're talking about something now that's 2 to 3 times the throughput we originally thought in a plant. The grade would be lower, but the economics, because we're mining via open pit, it's going to be a much more robust project. So I think that, we can't say anything until the feasibility is out at the end of next year. However, I can tell you it's going to be a much more robust project than we originally thought. And the value of it will be multiples of our current market cap.
Which all good news. With that comes opportunity. With that comes problems, because you're going to have to solve different sorts of problem from the one that you thought you were entering into here. Okay, so the scale just changed. You're going to have to work out, how do you process this? How do you finance the processing of this? And all the other things that come with an open pit plan, which, I understand the economics will be better, but it's not what you walked into. So what are the conversations you're having around changing the feasibility study, conversations in the marketplace? How do you finance it? All that kind of good stuff.
Well, first and foremost, the timeline for feasibility doesn't change because of the size of the project. It's still a certain time of seasonality that you have to do your fish sampling and flora and fauna and everything else, no matter what size it is. Because the actual mineralization hasn't changed size. It's just how we're going to mine it. So it's still 2.1 kilometers long. We'll have a 2 kilometer long pit now as opposed to a small starter pit of 300 or 400 meters. So there's a larger open area of open pit. But the major change is the waste associated with that. So with an open pit, obviously you'll have a lot more waste than an underground mine because of the stripping ratio of mining the waste to get to the ore. So the size of the waste piles will increase fourfold. Also, the size of the tailings will increase because there's a lot more gold and a lot more ore tons at the lower grade. So that's just drilling more holes for condemnation. It's drilling more geotechnical holes. It's doing further engineering work on the size of the tailings dam and the laydown areas for waste. But it doesn't extend the time frame for permitting. That is another 12 to 18 months away. So we've used the opportunity to finish our infill drilling and fully optimize the project to what it's at now. And for the next year, we'll be doing all the engineering and geotechnical. And obviously on the waste stockpiles, there's a lot more tons of rock that have to be looked at for acid generating potential and all the hazards you would have in a mining operation. We assume it won't be any different than what we currently have, and that it's relatively benign and we'll be fine.
Well, explain that to me. Underground versus open pit, the permitting process won't take us long, but it's a very different type of mining. Surely, there's a precedent elsewhere which says, actually, don't worry about it. We think we can get this through in a relatively short time frame.
Well, it's not going to be shorter. It's going to be the same time frame as the underground. We're mining the same deposit. We're just mining it with a different method, so it creates more waste. If the waste is benign, that's fine anyway. You're just using more surface area, purchasing more surface rights, whether it's private or crown rights. As far as the tailings go, it's the same ore. The same disposal of tailings will contain the same elements in it. And in our metallurgical work, there's nothing deleterious that's going to be put out into the environment with our process. There's just going to be more of it. So it doesn't really change that much. What it does change is that we don't have to do 2 years of underground development with no revenue to prepare enough working faces underground to put through a mill. So, instead of a starter pit whereby where that cash flow plus some raised cash will pay for underground for the next 2 years to try and develop it, we can actually start off with a larger mill, which will cost more upfront capital. But overall capital will be much cheaper for this project because the sustaining capex is not there for driving vent raises, ramps, drifts, adits, and all the things associated with underground.
Right. Generally, give me a general answer here. Obviously, underground is more expensive, typically when you're chasing high-grade veins. The equipment you need, etc. The capex is a different profile. Open pit, people like it. The economics are better. But so generally, how much better, how much more economic are open pits compared to underground mining? Because you've done the economics on the underground.
Well, at the end of the day, all mines are different. In our particular case, the difference between underground and surface mining is the difference between the two cutoffs that we've come up with for each. So for an open pit mine, anything over about 0.5 gram per ton makes money. In an underground mine, we had a cutoff of 2 grams, which was probably a little aggressive. It might even be higher. So that difference of 1.5 grams is the value difference between the two and the amount of ounces that you would lose. And in our case, we have a lot of tons of the 0.5 to 2 gram material that's going to generate cash flow for us at a larger throughput. So, as far as the difference between the value of both, I can't tell you a specific number. I can't give you a quantitative answer, but qualitatively, it's going to be a much more robust project
and quicker to market. So that's good news. So how do you process this? I mean, what were the options you were looking at? Do they change? Giving us a different grade?
This is the lower grade material is in a different rock type. And with the testing that we've done metallurgically, to our surprise, it says at the lower end, 0.5 to 1 gram per ton, the recoveries are the same as the high grade, 6-7 gram per ton, the mid 90s, which surprised us. But it's a different rock type. It's more disseminated in the host rock. So it actually is easier, cheaper to grind, and the ore, the gold is much cheaper. So overall, nothing really changes, and the process is still, as far as we know so far, is CIL/CIP, your standard, typical flow sheet for any mill, most mills out there for gold mines.
Okay, so next steps for you. I mean, you've got a year before you'll announce this to the marketplace. You're fully funded for that whole process, are you?
We're fully funded to construction. The first big step for us will be we will be announcing a new resource based on open pit mining as opposed to underground. So much it should be much higher in ounces, probably lower in grade, much higher in tons. That'll be announced before the end of the first quarter.
Okay.
That will be the basis for finalizing the optimized feasibility, which will take another 3 quarters. So by the end of next year, we'll have a feasibility study of an open pit mine, possibly with an underground tail, possibly not. We don't know yet, because the open pit mine might be a long enough mine life to do the feasibility just as an open pit.
Okay.
In reality, there will be an underground mine sometime in the future at Goldboro, because the ore just keeps going at depth.
Right.
So, in the first quarter, people are going to see the size, the growth profile of the resource. That's going to be the basis for finalizing the feasibility. And I think what you'll see is something similar to the other larger open pit mines in the East Coast.
Okay, so new plan at Goldboro. It's better than you thought. We should be looking forward to that. Back to current day, anything that's causing you concern, anything that should cause us concern with regards to existing operations and that cash flow that it's providing you at the moment? I mean, everything good at Point Roos, everything good at Argyle?
Everything's good, but again, it's still short mine life. We have approximately 2.5 years of material for us. However, we are drilling zone 278 that I mentioned earlier. That's not going to add it's not going to add the same as Argyle. It might add a year, somewhere between a year and a 2 year, a year to 2 years to our mine life, which, is great. But the real key is our exploration program at Tilt Cove. Tilt Cove is about 35 to 40 kilometers to the east of our current mill, truckable distance. And we have a 10,000 meter program ongoing right now. We're waiting for results back from the drilling of the first target. We've identified 13 major targets we want to drill. We've drilled one of them and we're waiting for results. We're on the second one, and we'll be going to others, winter drilling on some of the ponds and stuff. Any discovery hole could be very quick to production because we don't have to permit a tailings pond. We don't have to permit a mill. We just have to permit the mine because we can truck it to our existing facility, which the most valuable thing at Point Rousse is our tailings pond. It is 15-year capacity at full throughput. Our tailings pond is the old pit that we mined for 10 years, and we have a lot of storage capacity. And the value of that today, never mind 4 or 5 years of permitting, is in the tens of millions of dollars to develop it.
Right, so that exploration is very, very important. You are focused on that, not getting entirely distracted by the future of Goldboro. You know you got to take care of business here to keep that kind of cash flowing, right?
Correct. They're two separate. The two provinces that we're in, they're independently operating. There aren't synergies at the operating level. So, Goldboro is its own animal moving forward with feasibility and infill drilling and all the geotechnical and geochemical work. And then Newfoundland, which is going to keep providing us the cash flow, the positive cash flow. We're going to keep finding ore and keep supplying it while we're exploring for the higher grade discovery. And remember, we're making a lot of money right now at 1.5 grams going through the mill. We're looking for 5 to 10 grams at Tilt Cove because there's a past producer that's there that was mining at just sub 10 gram per ton diluted grade in the past. And we've got targets that are very similar geochemically and geophysically to that past producing mine that haven't been drilled. And we're drilling them now. So it's very exciting for us. A discovery hole could change the ounce throughput at Point Rousse without changing the mill or anything, just by grade, by 4 or 5 times.
Okay, but I want people to understand where they should be looking. So, like I say, it's business as usual, cash flow as usual. But we do remember the short life of mine there. But it's always been a short life of mine. You've always extended it out, right? But Tilt Cove to you is the next. If you get a discovery hole or two, it's a meaningful change from where you're at the moment, not because of the grade component. And I know you're trying to point us way, out of the distance about the huge potential at Goldboro, but I'm more interested in what today looks like because, you've got to keep telling that story too. You've got to keep throwing that cash off. So
correct. So today the cash is going to keep coming. We're going to make, at today's price of gold, we make close to $30 million over the next 2 years in free cash flow at Argyle. That's going to supply more than enough money to move forward on Goldboro, but more importantly, to keep drilling at Tilt Cove. So what people need to watch for today is we will still produce next year approximately the same amount of gold as this year from Argyle, approximately the same type of economic metrics. And then there'll be results coming out on a regular basis of drill program at Tilt Cove and some updates on Zone 278 to extend the mine life. So we're looking at something that's free cash flowing, looking to extend mine life, and possible high grade discovery.
Fantastic. Okay. Well, thanks very much for picking up the phone and talking us through what's happening at Goldboro, because that is a significant change there. I mean, it's a different company. I know you had high expectations, but at this level, it changes the economics significantly. And I look forward to staying in touch with you. Let us know how things are going on, okay?
Thanks very much. I just want to say thanks to all the shareholders and the people watching on this line. And stay tuned for a lot of information flow on the drilling front, discovery front, and development front in the near future. And our website's www.anacondamining.com for information. And we look forward to releasing results to you over the next several months.